Well, good morning, everyone, and welcome to the room. Happy New Year. As you know, trading futures does involve risk. It's not suitable for all investors. The information in the presentation is for educational purposes. It's not a trade signal service, not intended to be financial advice. Hope everyone is refreshed and rearing and ready to go. It was quite the end of year in the markets. I guess we'll just put it that way. This is the first time I've ever seen such high volatility around the end of the year, and we've got a lot of things happening on the charts, although the price action is not necessarily super healthy. And we'll look at a number of things today. You can see here, let me go to a weekly chart to start things off. The large retracement, actually I'm going to go out even further in case you didn't catch the video. So I've got my drawing long retracement all the way back 2016 low to our all-time high here in the ES, and that's what's giving me this 2375 50% retracement. I'm just using a very simple prior low, that being the kind of the major swing low back here in 2016. And I drew that up, and we indeed came down to that 2375 over the Christmas break, and so I saw that as an opportunity to add to some long positions, like retirement stuff, but really that was about it. I didn't do any trading in that last week. I kind of used it as a time to refresh. I know some folks were trading and caught some good moves, and that's great. So on the flip side, so that was the long. Then on the flip side, I came back up here and drew from the most recent swing high on the 3rd of December down to lows. And I also made a note of the all-time high down to lows. Now that's a 2643. I'm going to get rid of it for now just to clean up the chart, but we know it's up there, and we know it kind of lines up with the lows from back here in November and December. So it's just above the 61.8. That's sort of the final line in the sand, where when we break the 61.8 of the full high to low, in this case, when we break that 61.8, or any time we break the opposing, so in this case the long traded first, and so the opposing setup, the opposite setup would be the short. And you can come in here and you can draw up, little setups from grab a swing high and pull down to low, and then grab another swing high and pull down to low. But when we break the 61.8 of the full opposing from highs to lows, that's when we can really expect the long to be the authoritative move. And a lot of times what happens is we break the opposing short, and then we can turn around and look for a pullback into another long. So you have a really, really big setup, and then you have sequential setups also on the daily chart that continue to take us higher. So today we are gapping up just slightly up into this 2571.50. And yesterday I didn't place any trades. I just kind of used the morning to give me some clues as to what might be likely to happen. Here's my first 30 minutes kind of highlighted here. And you can see we did a lot of sideways movement. We ended up sort of drifting higher, not really in a strong trend. At the time, when you come over here and you look at the daily candle, it's not really one that says big body trend day, strong trending day, just sort of a drifting higher. And so now that we're at this 25.7150, it's going to be interesting to see, especially now we have a very strong breadth and advanced decline line. If we push right through, kind of go straight up, that was one of the scenarios I laid out in yesterday's market analysis video. We could move up above yesterday's high and then start to kind of accelerate higher and put in a big body candle to the upside that pushes us through this 26 high. And then, in that being the case, intraday, then we might get some good long opportunities. Or another scenario is gapping up here after a run up. What does that mean? Well, that could mean that the run up is sort of losing steam, and the gap up is sort of a last ditch effort, and we might sell off and then form a bearish engulfing where today's high might be higher than yesterday's high, and then the low for today could be lower than yesterday's low, a very bearish pattern where today is engulfing yesterday, and then that sends us back down to this 23.75s. It would kind of make sense that we retest this at some point, 23.75s. I'd be a little surprised if we just went straight down to it, made this V reversal, and then just reverted to all-time highs again. So it could be a little messy in the meantime. If we come up, let's say we break this 61.8, but then stop at the full retracement, and then that might be enough to push us down to 23.75s. But either way, we should have some pretty good intraday opportunities as the year starts to unfold here. So in relation to the market profile, we'll talk a little bit about the overnight. Here's where we're gapping up to this 25.76 and a quarter. You can see yesterday most of the trading occurred in this upper, we'll call it the upper half of the day. You can see these wider columns. That means more time was spent at 25.55 here, as opposed to only less than 30 minutes was spent between 25.40 and 25.45. So that means when, let's say, we start to sell off, when we get down to this area and we start breaking down, anywhere where we have these single prints, the market should move really quickly through these prices because there was not much trade there. There's not much support there. And so that's how I use the market profile to kind of give me an idea of, okay, yes, we have the value area where 70% of trade took place for that day, but it's also helpful to be able to see where price was very thin and not a lot of trading took place, because if I see a short setting up sort of as we break down from yesterday's value area, looking at this profile with thin price action, there's a good chance that we'll get some follow through on a short in that respect. And then the same goes for, let's say we start moving lower today. And if we do pull back, maybe we only pull back to 25.65, sort of the top of value area from yesterday. And that could be the support level that ends up holding us up. In terms of news, Redbook this morning with the same store sales were up. And the JOLTS report at the top of the hour is really it, the job openings. News-wise, let's go back to the overnight, pretty clearly trending higher. And this is something I was actually just talking about. When we move in the overnight in the Globex session, it's important that we trade there intraday. And so by moving higher and then actually opening sort of near highs of the overnight, that gives a little bit more credibility to the direction of the overnight trend. It doesn't mean that we're going to move higher intraday, but let's say we sort of made an upside down V where we spiked overnight and then we sold off. Well, I'd want to see us trade at that overnight price intraday to really have that high mean anything. So the overnight stuff isn't, I don't find it the most critical. I mean, you could just have a trading hours only ES chart with a 512 tick chart on it, and you can just come in here and give the markets 15 minutes and just start marking it up, identifying the high and the low from the first 15 minutes, and then drawing up your retracements from just start from the left of the morning, grab the highest point, and go down to the next low, and start placing your trades. If you have questions, feel free to type them in that chat box, and we can talk about them. I wouldn't say that the trend overnight in the Globex session directly carries into the current session. Like, I wouldn't have enough confidence to say, okay, this overnight trend was pretty strongly up. Our session this morning is going to be up. Just because there's not nearly as much volume. If I were to put on the extended hours, and I'm going to go to an hourly chart. You can really see, you get these spikes. Now I've got 24 hours on the left chart, and the overnight volume is very clear. I mean, it just disappears down here in these lulls. And so when you have very light volume, there's not as many trades taking place. So those that are placing trades, it doesn't take as much to move the market. It doesn't take as many contracts. And thus, you can push the market around a little bit easier overnight in the Globex session when there's less traders trading. But then you get the bulk of traders coming in at the NYSE Open, and that's where the trend really gets established. So far this morning, looking a lot like yesterday morning. Not that things can't change. A lot of times when you have a gap up like this, the open, if it's not going to be an immediate gap and go, then the first 30 minutes can be sort of a digestion period of combination of folks who maybe put on some long positions down here, and they're starting to maybe close out some of the positions up here. So the fact that we're moving sideways is actually a good thing right now, because if everyone, or if a lot of people started closing out positions, especially big positions, on a gap up like this, that's when you get that bigger sell-off right from the open. And that's why when you have a gap up at highs, or I wouldn't say at highs, but a gap up following an uptrend like here, and even here, we had this little uptrend, we gapped up. That was sort of the last ditch effort of moving the markets higher. And then the next day, selling, profit taking overtakes those who are interested in buying, and then the market moves down. Again, the market gaps up after a move higher, so traders take their profits, and there's stronger selling than buying, and then thus the market moves down. Now that we're down here, we're a lot lower price-wise than back here. But the same thing could happen where we kind of gap up, and if a lot more selling starts to happen, whether it's profit taking from short-term positions, which usually aren't the bulk of trades. Usually it's bigger banks and institutions that are putting on thousands of contracts that are going to easily outweigh, the pit traders or a hedge fund who might be putting on, 100 or a couple hundred contracts as a hedge. So not making a full pullback here from lows to highs, but it did get some follow through, making a new high. So just kind of making some mental notes here, seeing how the market is reacting to retracements. Here we pulled back close to it, made a new high, but didn't go much beyond that. And then now as I draw from lows all the way to highs, we can see the market coming back to its sort of midpoint, kind of where we opened this morning. And as I zoom out, you can see pretty horizontal with the initial trend this morning. So a lot like yesterday. Not that, so we can always turn from a range bound scenario into a trending scenario or vice versa. But I find that that first 15, 30 minutes can be a good gauge. And at the very least, it can give you some anchor points to, okay, now we have a low and we have a high. So let me draw up this 50% retracement. Let's see if there's anything here. And if we start to round out here, holding the 61.8 and start moving higher, well, then we have some highs and lows that we can use to draw up another retracement. We would then have some support or some resistance over here to the left that can help our trades kind of get going. But if you jump in too early and just start throwing orders at the markets, then you start with a losing trade, you get frustrated, and then you can get sucked into that downward spiral. One thing that I know a few traders will do, and it's something I've even done, is in the pre-market just open up my account on a sim account and just click around a little bit, kind of get some of those initial trade jitters out of the way if you have them. And it's something I used to do when I was first starting out, and then switch to live when the market opens. And I was kind of calmed down a little bit, got the initial wanting to get in the trade as soon as I opened my chart out of the way. So here, noticing that, okay, there was a little bit of a reaction to at the 50%, but not much. And now as we look at this chart, you're really starting to see that widening formation that we talk about. That's a very dangerous pattern. When you start very wide in the left and you get tighter, you're consolidating. That's a healthy pattern. But when you're getting wider, meaning the highs are getting higher and the lows are getting lower, that makes for a very, very challenging market condition. And a lot of times that's a sign that we're going to reverse and change direction. Whereas if I could mirror this, and the left started really wide, and then we got a little bit lower high, but then also a higher low. And we started to make this triangle where the point or the apex of the triangle is on the right. That's a sign of, consolidation that leads to continuation. So a lot of these concepts are, things that we kind of see day in and day out, and some of the stuff can get a little bit repetitive, but the good thing is when you see setups, trends, one market over and over again, you get so much more familiar with it. And if you go back and find a really, really good trend day and then compare that to any other day, it becomes really clear when another trend day is starting to form. So the next time, let's say later this week, we open up and we have a really good big body candle, nice trend day, clean market, good adhering to, pulling back to the 50% retracements and then continuing on, and then the next pulls back and continues on, good sort of stair stepping. Take a mental screenshot of that, or take an actual screenshot, and then you can use that to compare. Okay, here is a good looking trend day. I had some good trades. I felt like the market was clean and I was seeing things clearly. Now let me take this piece of paper and hold it up next to Wednesday morning, tomorrow, and how does it compare? How does the start of Wednesday compare to this trend day that I'm holding in my hand? And obviously we know that no 2 days are going to be exactly alike, but there's a lot of similarities that you can pull. And so that day in, day out repetition is really what helps clear that up. So this first low to high that I have up here is really just a starting point, if you will. You don't know if the very first setup is going to have any sort of reaction. So I just use that as a way to say, okay, well, here is the first setup that I can really draw. Let's see what happens at the 50%. In this case, we dove down after a small bounce through the 61.8. So now I can come down and draw up the setup in the other direction. Again, not looking to take a blind limit here at the 50%, but to start the process of drawing the setup so that when we do make a pullback and get a clean reaction, we can then begin to get in some trades off of that level. So let's say we came up here 25.75 and then we got a little bit of a sell-off, then we could draw a smaller setup on the 512 to place the trade. .44s is the high, and not really, relatively in the high tick zone, but nothing very definitive that early in the morning. And then down here, 51s, not really in the low tick zone. So the nicey tick's not really doing much to help us out at this point, this early in the morning. This 25.71.50, this short, is pretty strong in terms of it's a daily level. Would have been nice to make a pullback off of highs into the short, which we didn't get. But that's definitely so. So I've got the two charts side by side. I'm not really using, I'm placing my trades on the 512 tick chart over here on the right. But it's helpful to keep in mind the daily chart context of this 25.71.50. That's right about where we're sitting here. And so if I can get in a short on the 512 tick chart somewhere here, whether it's 75, 71s, we could start a bigger sell-off because we're at this larger daily short. So it's helpful to, whether you just write that number down and then minimize that chart, or I'm not a huge fan of putting lines all over my charts, just because you come over here and you put a line on your chart. Like, let's say, oh, here's some resistance up here. I'm going to place a resistance line, horizontal resistance. Well, then you start to look at it as price is going to stop at this line, and it can be deceiving. Dipped into a new low and then immediately fired back to the upside. That's always something to make note of. If we make a new high or make a new low, and then only here by point, and then immediately spiked back up, that was a low tick, 54, and low tick of not even 0, but still a low tick for the day. So I'm going to draw this up and draw up here. And that gives us a long, quick here, 71. So 71, and let's see if that takes us up to this short or if it can take us up any higher. Again, this widening formation can be kind of a dangerous place to be. But we'll draw it up and we'll keep this full short drawn up as well. Even down here, a little bit of a widening leg of the wider wedge. It doesn't look like it's there's much there either. So some good cues coming off of the first 20 minutes that can really help set the tone for the day. And as you kind of start the new year, it's good to kind of ease into things. Let's say you finish the year trading 4 contracts, maybe you start things off at 2, just to kind of start off on a good note so that you don't dig yourself into a hole that you can't. You feel like you're underwater to start the year. That JOLTS number should be coming out in a couple of minutes. I'm just going to continue along. So I like to I'll leave up the prior drawing till we make a new higher low, and I'll come down and draw the next one just to continue following along so that when we get a setup that looks good that I want to jump into, you have sort of a continuation of your retracements. And then I'll continue to pull to the lowest low as long as we don't come up and tag the full retracement short. At some point we will. So it's helpful to keep that up. And that may end up being the first setup really of the day, a larger halfway back of the day that starts to get some follow through, and then a very small 512 off of that as the entry. Some of the bigger names in pretty solid downtrends. those healthcare stocks that were trading very strong also sort of breaking their trend. So here's our first retracement in this kind of messy last 10 minutes, 15 minutes that's getting a nice reaction at its 50%. So a sign that things could be changing a little bit. We're still in this sub-widening formation here. As you can see, the lows are lower and the highs are slightly higher, almost horizontal. But it'd be really nice if we could get up to this 50% and see what happens there so that we can start to build some confidence on the morning that maybe we can get some resistance here and either start a sell-off, which being right at this 25.70, 150 would expect a little bit of follow through there. You have to keep in mind that we did gap up this morning, and so to the broader market, when you're just looking at the Dow, Dow up 300, Dow up 200 or whatever, it looks pretty rosy. And when we talk about, uncertainty being sort of the killer of the market, certainty is what calms things down. Even if it's bad, that's why even if the news announcements or things come out, economic numbers, forecasts, even when maybe they don't hit their earnings, a company doesn't hit their earnings report, just having the report out, having certainty does a lot for calming the markets. So our low today, was it the high of yesterday? It looks like it. So 67.50 here. So making a nice clean move up to this 50% halfway back of the day. If we can come down and break a few more ticks, I'll be looking here at a possible short. Still, still not a very clean morning by any means, but these last 4 or 5 minutes definitely looking better than we have all morning. Yeah, I'd like to see us come down and break this prior swing low. So we start moving up, we pull back, we move up and pull back, and sometimes you get a double top. Like if we started to sell off from here, you could use this cluster as your swing low. So a 73. Just prior to that, just as you said, 72s would be the low that would need to break in order to draw up the short. So by using the swing lows as your guide, because by definition, as long as we're making higher highs and higher lows, we're in an uptrend. So once a low is broken, that's the potential very first start of a downtrend, or at least a change in trend. So if we can get into the new trend as soon as possible, then we have the best opportunity for reaping the rewards. But you can see here on the 30-minute chart, the body of the first 30 minutes, we've just sort of turned around and taken it back. We moved down, and then the next 30 minutes giving it back. Yesterday, this long tail at the open, and then the next 30 minutes spinning top, sort of moving down, and then the next 30 minutes just taking it right back. Very, very range bound, not at all trending. Whereas this third candle then starts to break out and get some follow through. That's what we're looking for. And with this daily, this 25.7150 here, it's definitely, you kind of feel the weight of that pushing the market down a little bit. All right, so we got a 73.25 is the short. Broke the swing low. This would be the first 512 after the halfway back of the day. We'll see if anything is there. So 25.73 short. Taking that as the limit just by rounding down and subtracting a tick. We did not touch so there's the fill. We did not touch the full long yet, so that's why the short gets in play. So here's our first target. It's pretty small, 71. I actually had it at a 75. Could have been a 72. But regardless, a 1.5 is still 1-to-1. So if you have two contracts, taking one off at the negative 23% target or somewhere around, at least 1-to-1 helps reduce the risk on the trade. This entry candle is a high of 73.50s. it's not really a big swing high. I'm be hesitant to get too tight on my stop just yet because we really haven't moved. Even though it hit the negative 23% target, it's still pretty small. One thing you can do is draw the full retracement and put your stop above that 61.8. So if you want to move it to 74s, I think I'll start with that. Okay, now as we start to move lower, see how we don't have a major swing high, just these little one candles. What I'm going to do is draw up, I'm going to move this anchor point down, and I'm going to move my stop above the 61.8. Just going to move it up a couple ticks above it. So I'm going to move it to 73.75. And did we break the opposing? So here's the long. We're kind of sitting right at the long, right at the point where if we're going to move higher, it's probably going to happen from here, but at least, our stop is close to break even, and that's just based on the chart. So rather than, having the trade go a point in our favor and moving to break even because we're scared, I'm using the 61.8. I'm using the chart to dictate my stop placement. And then, okay, good. Now we're getting a little away from our entry. So now we can start to move this thing down. So I'm going to move my stop down to 72.75, right above this candle here. If you've got two contracts, you took the one off at the negative 23, you kind of have a decision to make here as we start to move. We haven't really made any pullbacks really. You can start trailing each candle's high, which you may want to do as we break down, especially if we break lows. Yep, new low. So even if you have a third contract or a couple more, we're kind of going straight down. It's nice to just trail each candle's high. So I'm going to do two things. I'm going to try and trail the full at 72s, and then I'm going to take also a portion and trail each candle, and I'm going to put that at 67.75. So I have two stops. I've got one at 72s, and then one here at the 67.75. I'm going to try to manage both of them here at the same time. The target is 64, 60. We'll just call it 65s. In a low tick down here, so definitely trailing each candle here. So 66.50. I'm gonna 64.75. 64.25. So you can see how fast. I mean, you're just basically. I've got hand kind of covering that stop. 64. It's at 64.75 because we haven't broken this low down here. So I'm gonna leave it up there. 64.75. With no real pullback in the mix here. So we're already beyond the target, but I'm just going to keep trailing as long as I can here. So now that we broke down again, 60. I'm going to just do 63.50. And I'm going to add a couple more contracts. I've only got 62.75. and I've got more contracts on that than I do the full at this point. Rather than letting it come all the way back up, what is that? Another 5 points. I think I'm gonna move it all down here. 62.75. There it goes. Okay. So, kind of recap. Right there at the end, I looked at the distance here of this full retracement and just kind of made the judgment call that rather than letting the market come all the way back up to not just the 50% of 68s, but the 61.8 where my stop was, that's 7 points. I'd rather get out down here and then take the risk, because if I put on a brand new position, let's just say with 2 contracts, that's $75 or a point and a half per contract. So I could get out and then put on the position again. The risk that you have is sort of what we see here, is if the market doesn't come back up and make that full retracement. But I'm okay taking that smaller profit that's still pretty large, even if we keep going down here. So yeah, that was a good one. 70, what was it, 72.75? $72.25 down. When you go through a negative 23% target on a bigger level, like this would be visible almost on the 15-minute chart. Even if on the 30-minute chart, if I take that first bar high to low, you can't get overly greedy there. When you're going, every one of these candles made a new low without breaking the prior candle's high. Just straight down. And then we broke through the negative 23% target. If you want to keep, let's say you have 4 contracts, okay, then you can start, it's nice when you get to like 4 or 5 contracts, you can take one off at the negative 23 and then have a couple to trail, and then you can keep one on to trail. But even then, you're giving back. Like I got to the point where I had my stop up here at I just had it at 70s, and I had 1 contract up there. Well, that's still 7 points, and you're talking $350. So it's you just kind of have to weigh the market retracing versus covering what you got. All right, let's kind of regroup here. 13s, 17, 15. So now the market looking a lot better, even if we just draw this short here. Coming up to the 50%, adhering nicely, selling off. If this wasn't basically the first full week of trading, I would probably be a little bit more lax with my stop, and maybe more likely keep at least 1 contract on in case we get into a situation where we start going down and don't make any retracement. But it's kind of nice to get a couple of consistent solid trades off, and kind of get in that rhythm of getting in trades, getting out of the trade, moving on to the next one. managing the position as best you can, and just making getting in the habit of those like quick decisions that you just have to assess the information. All you have is the information that's right in front of you. You make the best decision that you can with that information, and then you can't go back and second guess yourself and say, well, I got out here, but I should have held on for an extra point and a half. Instead of looking at what you maybe quote unquote missed out on, you got to look at, okay, well, I started the trade at 0 and I ended up with 10 points. Well, that's a big win in itself. So all right, so our low ticks are starting to get into low territory, so that's good. Whenever you have these nicey ticks that start super extreme, you get a move down to the 0 line, and then you kind of establish an actual relative high and low. So like an 850, I'd consider that a high tick, and then 750 is low tick relative to today. Yesterday's close is a 50.25. The other thing you can do, I guess I should have mentioned that too, is you can take, since we're at this daily, putting on a short on like the SPY and holding it overnight, that's a great play. You don't have to. You can enter on the SPY to hold overnight as opposed to holding the futures. And I guess kind of got caught up in the trade, but yeah, remembering that this is a daily short that has a target, almost 100 points away. Yeah, beyond that, 140 points away. So if this sells off and takes us down, you get short on the SPY with, 100 contract or 100 shares, or just, pick a dollar amount, put your stop, take your entry. Let's say we were at 72s here, but go to the SPY. So this is what I would do. I'd come over here. I'd say, okay, we were at 254, and then the high for the day is 257. So just divide, or subtract those two, you get $3. And if you want to risk $300 and you buy 100 shares, put your stop above the highs, and then that's your swing trade position. And that can be an effective way to take advantage of the daily and gaps and things like that, because you're already in the trade. And your stop is very well managed. Your risk is very well managed with your stop. Yeah, 73.25. Sorry, Stan. Yeah, that's what it was. With that first halfway back of the day, the negative 23, come all the way down to the negative 61.8. drawing a traditional off of that from the entry down to lows is usually where I would start. Given that you have a little bit of consolidation down here, I would lean more towards us moving higher, just because we kind of made this move straight down right away, very quickly. The market usually takes a little breather. So for that reason, I would kind of allow it to come back up, see if we make it up to the next 50%, and then kind of do the same thing. Come in here, zoom into the 512, look for a little swing low break, and then look for maybe a short off of that level. Low is at 19s. Doesn't line up with the low tick of the day. Still getting some good 50% adhering. So definitely a lot cleaner, some better looking market than in the first 20, 30 minutes. Oh, I need to mark the first 30-minute low. That could be a definite resistance point here. So that 30-minute low kind of lines us up. It's right in the middle of the 50 and the 61. If I draw the full, it's kind of just below it. So that could get a little bit messy in that area, 66 to 69, but we're not there yet. You can see this trend line here starts at a 45-degree angle, and now we come getting very, very steep. Well, that's not sustainable to go straight down like that. So you can kind of expect a market breather or a bounce. I'm going to draw up the long opposing here. I'm not going to take it, but I am going to draw it up. You could say that there's some support here. The 50 and the 61 is within 6 ticks, thereabouts. Not quite tagged it. It was a 61. Came a tick away. You could add a tick to that, but even so, it only touched 61 25. I'm just going to leave that up and see what happens down here, see if it pushes us up to, we're about the hour mark, and there tends to be some sort of actionable move around the hour mark. That gap fill still, what was it, 50 and a quarter. So it's still 9 points away. So we could drop off here and sell hard if you, without making a bigger pullback. You have this here. You have a little double top. You could do this since we broke the 61.8. Look for a bounce into the short at 60.75, 60.50. You can also just put a sell stop one tick below lows at 57 and a quarter. I'll do that sometimes if we're kind of in a free fall mode. Here's an exact double bottom at lows. So that break would be a 57 and a quarter. And I would just do, when I do that, I'm just using a sell stop to kind of let the market punch through, and then same 6-tick stop, but expecting it to punch through and gain momentum. And I'll usually do that with a little bit fewer contracts. Made this one candle high, 58.75, if you want to tighten your stop. Getting a little bit of not the breakdown punch through that I would like to see. A little bit more. There's some buying coming in here, so being a little more conservative. 58.50 is that next one candle's high. Yeah, so not much there. 58.75. All right, so we might get some rounding out down here. This next tracement is a 59.75. Didn't really get up there. On the 30-minute, you can see a little bit of a uptrend line forming here. And we're coming down to the bottom of that. So if we were to break, say, the gap fill that gap and then start breaking down below this trend line, then I could see a nice drop off below that line there. I'm not sure about that, Mike. If my charts are moving ahead of your charts, that wouldn't really make sense because it has to capture the screen and then send it out through GoToMeeting, which, I mean, we're talking fractions of a second, but it's still, I would think that's enough of a delay where they would be in line, or yours would even be ahead ever so slightly. Yeah, anytime we have a gap, I'm always looking for us to, you got to make a note of that gap. And if we don't fill it today, we might fill it a month from now. And usually there's some sort of a bounce at the gap fill at that price. Therefore, you want to know where they are and just keep a post-it or a gap fill on it and write down the various gaps that occur, and then as they fill, then I just cross them off. Yeah, let me pull back my market profile chart here. Getting a little bit messy down here. See how we've got red candle, green candle, moving down by a tick and then up by a couple ticks and then down. Not the best place to be trading. Let's see here. So let's look at this here. So here's where we opened, and we've moved down. This is the first hour, the first two 30-minute candles. Value area high was here. We've moved down, and it makes sense. What I just said, we were getting these a little bit more back and forth, move down a couple ticks, move up a couple ticks. Well, what's happening? We're getting into an area where there was a lot of trade yesterday. And so there was a lot of both buying and selling yesterday. And so as we get into these thicker TPOs where more trade took place, there's going to be more traders who want to be active in those levels, as opposed to when we were selling off. What did we do? It was a 73.25. So we went from here down to like here, and there was not as much trade that took place. So that makes sense that we moved very quickly down through, kind of towards the top of yesterday's value area very quickly. Now we're getting a little bit more resistance as we get into this thicker support area. So here's that close down here, yesterday's close. So it could be a little bit more slow going down to that level. Should have adjusted that earlier. It was a 59.50. Now notice we didn't make a retracement into the prior 50%. So using this swing high down to lows is a little bit higher risk. I don't like to see a lot of unfilled entries, like these holes up here, it shows that we're sort of getting a little bit overextended, but doesn't mean that they can't work out at 59.50. But I'm going to get rid of this since we didn't trade at it. Market's still up for the day. Very much so, but we'll see if this 59.50 moves down into 54.25. This would kind of be the opposite situation of earlier, where the retracement was very small to the first target. In this case, the distance between the 50 and the negative 23, you're about 5 points. So if you want to use like the prior lows or just use an arbitrary 2.5 points for that first target, that's okay. You just want something to be able to lock in a little bit of profit. Let's say you have 3 contracts. I like 3. 3 intervals of 3, 3, 6, 9, stuff like that. Taking one off at 2 points reduces your risk by a lot on the trade. Now that we've broken lows, I would just take my stop and put it above the swing high at 60.50. So you reduce your risk by taking a profit on one of the 3 contracts, and then or one of 2. So now you have profit on one contract, you have fewer contracts at risk, and you begin to tighten your stop. That does a lot for the consistency that you can build with just trading 2 or 3 contracts. And this is a situation where I would leave up this initial drawing until we either break the 61.8 or come down, hit the negative 23. I wouldn't adjust my anchor point to this low here because the trade is already in play. We already touched and traded at this 50% back here. You can do a lot with 2 to 3 contracts. You don't have to be trading 10, 15, 20 contracts to develop as a trader. And oftentimes I encourage people to trade on sim with multiples. Then when you go back to live, if you want to start with 1 to kind of build some of those emotional skills, the psychological, the real money at risk kind of skills, make that the focus of your 1 contract trading and just pick an exit strategy. You're going to take it all off at the negative 23 or you're going to trail. Don't focus so much on the P&L. Touched 54.25. There we go. So with 2, taking 1 off for about or somewhere around 2 points, and then taking the second one in this case off at like the 5 point mark down at 54.25. you you only have so many contracts to use. If you have a third, then you can do a couple things. You can be conservative and trail the full 61.8, or like we did earlier, just come down here, and as we start selling off, you just trail each candle's high. And in this case, when you have all the bottoms lining up, I would just leave it up here at, we'll just call it a 55. And then if we break lows, then you can move it underneath the next candle's high. So 54. Once you can get away from your entry, especially in a market like the ES, I mean, 10-point trades are not that, they're not outliers. I mean, they don't happen every day, but they're definitely common enough to where you can catch some, 10 points with one contract is solid. 10 points with two contracts, still solid. You don't want to be the type of trader who puts on 10 contracts and then takes one off at every half point. Oh, the market moved a point, I'm going to take one off. Market moved another 2 ticks, I'm going to take one off. Because then when you look at your average, yeah, you might make $1,000, but how much are you risking? What's your R? Divide your reward by your risk. If you were risking 1,000 and you made 1,000, your R multiple is 1. If you're trading 2 contracts and you're risking $150 and you made $300, well, your R multiple is 2, 2 to 1. So when someone says, "Oh, I made $50,000 trading on this one trade," okay, well, that's great. 50,000 is 50,000, but how much were you risking? Did you risk $500? And in which case that would have a lot more impact than, were you risking 100,000 and you made 50,000? So it's all contextual, it's all relative. And we are close to filling that gap. Another reason I like to have the side-by-side charts here is sometimes you get over here in the 512 and, to use that phrase, you kind of get into the weeds and you can forget about some of the larger levels that are happening. Or, a good reminder, okay, that daily short that we just traded at is an important level up here. And that could have some longer term weight. So I'm adjusting this anchor down because we didn't trade at the 50% yet. Then I'll get rid of this first drawing. You can see this mountain of volume increasing as we move down, decreasing as we moved up. I mean, this is, if you go back to any other year and go to the time between basically the end of the year, I mean, volume just, it's very, very minimal relative to the surrounding time. The end of December is typically very low volume. Then you come to this year, and end of December is just this huge volume. I mean, there's been a lot going on in terms of things here in the U.S., government shutdown and whatnot, but definitely an anomaly year, an outlier year. You see these gap ups after the little run up and the sell off, just like we were talking about, just like I was talking about this morning, where you have a sell off, a gap up after a move up is typically a bearish sign. Look at all these, gap ups after a run up, you get the sell off. Gap up after a little bit of run up, sell off. Here, gap up after a run up, sell off. Versus the gap up. Now let's look at the opposite. Gap up, down after a move down. What followed? A move up. Gap up after a move down, we get a run up. Gap up after a move down, you get a run up. So it's all about context, all relative. It's all relative, as they say. And there's our gap fill. So now we need to be watching for a bounce. But the daily short may have enough players involved where the low is a 47.25. That might just be the breaking point. If we can break that, I had this trend line drawn here. That might really be what takes us down here. Oh, I missed that one. I had it drawn up. Sorry, 52s was the short. I missed it. I'll draw up the next one here. But so going back to the whole, placing a short on the SPY, just using the SPY as your vehicle for overnight trading. If you come back to intraday, yes, you can, keep going back to that first trade. If you kept one contract on and just came in here and trailed the 61.8, like use that same anchor point and just trail the 61.8, yeah, you could stay in the trade, but we're down here at 48s. Your stop would be at 65s. I mean, that's a huge wiggle room for your stop. So I would rather kind of keep the two separate. If you're going to go for a big move, even if it's just a matter of hanging on to that short position in the SPY for the day, you could use an option contract, but you got to be a lot more precise with your exits when you're using options. But let's just say you're using the underlying, which is my go-to. You've got your risk defined. You can swing trade that, whether it's holding it through the day or holding it, by trailing each candle's high. So let's say today we close down, or at least if we don't break today's high, then tomorrow, if we move lower, you can move your stop above whatever the high ends up being tomorrow, and just continue to do that, follow it down, trailing each candle's high, just like we did on the intraday chart. And that's a great way to get in a swing trade position and ride it out, or a great way to take advantage of, being at a daily short, wanting to participate, but not wanting to hold a futures contract overnight, which I strongly discourage. Value area low was 45.75. And the point of control was 49, kind of right where we're at, right at this gap fill. So, but here's this 49.50 that's getting a little reaction. I'd be a little careful down here now, though, because the gap has filled. We moved down the first 3 candles. We're about an hour and a half into the day. And a lot of times you get kind of a sine wave in the day. So like yesterday, we moved up, we moved down, then we kind of moved up slightly at the close. So again, it's helpful to keep the drawings on your chart, even if I'm not taking a trade at that 50%, just to continue the drawing. Here again, you kind of move like a sideways S, down, up, down, up, down, up. I would expect maybe down, maybe some sideways, or maybe a green candle in here over lunchtime, and then selling off into the close, something like that. It'd be great if there was a way where I could have one mouse that I could move across 2 computers instead of having, because I've got 2 separate computers, and then you got to have two separate. I'm sure there might be something out there that I don't know of, but that would be clever. So some good stuff today. Good initial opening, kind of forcing that patience. Good short that had some really good follow through. Patiently waiting for that first full halfway back before placing a trade. Waiting through the chop. We ended up moving lower, so trying to take a short down here as we broke lows. It's was a good play still in my eyes. We were approaching the gap fill, so the direction was good. Just was a little bit of too wiggly before to stay in the trade, and that happens. Thanks, Ron. I'll have to take a look at that. So if you can start building some traction with good trades early on in the year, then that can do a lot for your momentum. Now, whether or not to come up here and get a full 50% retracement would be a big move up. You'd really have to get a strong push by the bulls. But if we start to, so what I'd look for here is sort of a swing low to develop, and then either come up and see if it stops at this retracement from this swing high. And we'd have to break a swing low before I would jump into another short, especially this time of day. Like usually you see some sort of a bounce. So I would say the year's off to a good start, though. A little bit, you can see even a widening formation here where the highs are getting higher and the lows are still getting higher, but we were tighter on the left and we're getting a little bit wider on the right. So being at this daily short, we'll see if that the high from today holds, and if that S&P swing trade, SPY swing trade, can carry us down from here. And if we move up, we've got that full halfway back of the day above us at 25.64s. So I think we'll leave it at that for now. If you have other questions, as always, feel free to shoot me an email, tim@eminimind.com. Happy to converse more there, and I know I'll be speaking with some of you throughout the coming weeks. Always enjoy those conversations, and if anything, like I said, my email's always open. Appreciate you tuning in this morning. Year's off to a pretty good start, and January, February, March, usually a lot of good trading. So expect good things in this this winter season into spring, really until Memorial Day weekend. Trading is usually this is the time to be active in trading. So have a great day, everyone, and we'll talk to you next week.